All right, bias game. I must say, and this is where, I don't know, there were a lot of exciting points for me in preparation for this class. And this is probably was the biggest because except for one or two people in this class, we failed as a class to recognize the bias. Let's look at the social media first. 83% said that this range is a distribution. So again, this is an outlier. And I was thinking, why? What is wrong here? Did we do something incorrectly? Maybe, it was too difficult because of where we stopped, right? So where are we stopping? Well, we already know that this was an accumulation. So we stopped right here. And actually, members of my content team, they were saying, well, kind of, a spot where you almost intuitively think that this is a distribution, just the way how the structure looks. And remember, guys, what I said to you, that I don't want to give you the chart at this point. If the chart is at this point, what are we thinking, guys? What are you thinking at this point? The price was trying to move down, was trying to commit to the downside, and then quickly comes back into the trading range and supply diminishes. Bullish or bearish at that yellow point? Is that a clearer point than the one that I gave you? Than this one? I think it would be, and that's why it's not as challenging. So therefore, the key here at this point is to understand bias from the data that comes. So basically, by the time we get to this point, we already should be bullish, and this acts only as a confirmation to us, and we are actually loading up, and we're not thinking that about the analysis itself. So I started thinking, okay, well, I'm kind of still gonna go with that. We're still gonna be in the middle of the range. So, and the range kind of turned out to be in the middle here. In the middle of the range, this is where the bias always going to be. And then from there, you have to think what it's going to be to the downside or to the upside. And then I thought, well, what is the biggest problem here? Let's just think about this as kind of like the overall feel that we have. What are we failing at? Are we failing at identification of the bias itself, or are we failing at the identification of the character? And I want you to think about this as we go through Dimitri's logic here. So I'm really grateful to Dimitri because he sent me an email early on, and sometimes, guys, when I see your emails and I kind of, through the emails with some of you, I have this, like quick correspondence where I might, push a couple of sentences towards your way. And just what I want to do with those quick emails to you is I want you to keep thinking until this class about some other concepts, like, well, think about like what is the character here. And one of my questions to Dmitry was, look at this piece that I sent you, and this was from his email. I just cropped it out, and I said, could you please analyze this for me, this downtrend? It's clearly a downtrend. Lower highs, lower lows. So let's analyze it together with Dmitry and let's see where the logic brings us. Okay, so I'm really grateful to Dmitry that he was so open, to do this. The bias starts to the downside. Hold on a second. We actually don't know. I mean, like if we would be, if the assignment to start here, we probably don't know what the bias is at this point. So the swing one, the orange one, is I see an increase in volume and increase in the spread. My bias is down. Now bias is down. Next swing. I see demand came in, creating a stop in action of swing one. Yes, we have a climactic bar here, and then we have a change of character, which suggests what? A trading range. Our trading range develops like this. It's an expanding triangle, kind of like diagonal. So all of our tests come on the support level like this, and then that creates a horizontal structure. The price doesn't commit above the high swing number one, although I saw demand come in at the bottom of the swing one to see, and I see no bullish result, and my bias remains to the downside. Okay, well, demand definitely is here on these two bars, on these three bars actually, 1, 2, and 3. So somebody's seeing the value here. That's usually what you're gonna see, at the oversold condition. What kind of rally we have? We can't even overcome this bar. So we're still in the downside bias here. On the last two bars, by the way, some supply comes in, which still tells you that we still have some selling. Cyan, the swing goes down back to the support area. The spread to the downside is decreasing relative to swing number one. There is less volume and less velocity to the downside on swing number three. My bias is not bullish yet, but starting to take note that the downside bias is losing validity. That is not true. Downside bias is not losing validity yet. There is no failure yet of the downside bias. The observation is correct. The deduction is wrong. What is the observation? That the spread on this reaction is showing deterioration of selling. There is less selling. We see that also in the volume confirmation. Supply goes down on the overall volume diminished character. What is the deduction here then? Where this happens contextually at the area of the support. Of here on the diminished selling, we would be expecting some kind of rally. Rally does not negate a downside bias that we are in. We're going to say that the rally is going to either confirm bearish bias, and this would mean that the rally would have bearish characteristics, or that bias would fail. Downward bias would fail, and therefore a rally would have bullish characteristics. Okay, let's see how we're judging the next rally. That is in blue. Increased spread, correct, and velocity, correct, to the upside on the overall decreased volume signature, correct. Ease of movement to the upside, incorrect. Why is this incorrect? The ease of movement would not only show a commitment, but also sustainability of the move. we don't have a sustainability of the move. We have a temporary commitment and then failure, so this acts more as an upthrust and not an ease of movement. Higher high is created, buys are starting to turn up to the upside. Incorrect, because after the upthrust action, we are coming back into the range. So our commitment, what looked so bullish, is just temporary and therefore in line still with the bearish bias. It was not negated. It has not failed. All right, let's go to the next one. Swing number 5. Price spread and velocity increases. Again, back to the downside. Let me just clean this up. We're looking at this reaction right here. Let's come back. Price spread and velocity increases again back to the downside. Is this a correct statement or incorrect statement, guys? What do you think? Is this a correct statement or incorrect? Is there an increase? All right. Uh-huh. And Dmitry is asking exactly the question, that should be asked. Dmitry is asking relative to what? Relative to science swing? And that's the key, right? So what are you comparing this to? If you're comparing this to science swing, then definitely we have increase in velocity, spread is increasing, and so on and so forth. But what if you're comparing it to the first leg, to the downside? Then when you look at this spread right here and comparing it to this one, you kind of see that there is it's not as large as, spread number 1 right here. So the largest spread is actually diminished and also has a tail. So if you would take from open to the close, the actual distance that was traveled from one commitment to another, you see, and it's very subtle. And that's why, we are in this class, and that's why I'm learning as well, guys, how to see this, how to interpret this, how to teach this. But this is a slight nuance right here. This spread is slightly diminishes. And if it slightly diminishes, also, let's look at the progression. I'm jumping a little bit ahead, but here is our support cluster that was created by one low and by another low. So the next commitment comes, the lowest close comes right here. This is the low, this is the close. This is as much as the price could have committed on that reaction with so much effort. So what does it tell us then? Why couldn't it commit more with so much effort? There was something in the way. What was it? The opposing force. Some demand came in at that point. So now we're thinking, interesting picture. We have some demand here that comes in, and then we have some demand somewhere here that comes in on this 2-3 bars. And it looks more like value buying. Why? Because demand comes in and then the price rallies, but there is no continuation. And we kind of see that again in this picture with the demand. Demand is not buying on the way up. Demand only buying value. And that suggests retesting again. And when it retests again, demand comes in again and produces now slightly different picture. If we're talking about analogs, then which analog is the best analog? Which analog is the most bullish analog that we could see? Effort, effort, effort. Compare the effort that comes in and compare the structural position of the largest bar to the downside, stopping bar, and then reversal bar. That's the structure. Largest bar, stopping bar, reversal bar. Largest bar, stopping bar, and these two are reversal bars. This is the smallest effort that is producing the best result. Why is this the best result? Well, because the largest bar to the downside is the smallest among the three. Stop in action is not that threatening, and then more importantly, the demand that comes in produces commitment to the upside above the high of the down bar, which never happened before, and the bullish bars are the best that we're seeing. So that's just on the demand side, on the value demand. And value demand is really hard to see because not in the way that, to identify it. No, we could identify it really quickly, but it's hard to see because it just buys and goes away, buys and goes away, buys, and then it requires momentum traders, institutional traders, to come in and to kind of like push above. Otherwise, it's just going to kind of grind up like this, and then momentum traders are going to start picking it up. Well, let's continue really quickly. I'm not going to continue here with Dmitri's analysis. Dmitri, I think that you kind of see already where I'm going with this, right? So again, we're learning how to make correct observations. We're also learning how to make correct deductions. This is not the end of this analysis. Obviously, let's see what happens next. On the increased demand signature over the previous period, we're seeing maybe a slightly better rally, but also the rally that fails. So, and there are some suggestion that there is, maybe some selling into those up bars. Okay, well, what would this selling produce? Last reaction. How much lower do we commit? This is probably the lowest commitment that we have here, with two progressive closes to the downside. But then again, when we look at the extent of their aggressiveness on the breakdowns, we don't see a lot of aggression to the downside in the result. And then we see more ability of, to travel on the increased demand signature here. So also looking at the character with which the price moves on the last swing to the downside. Look at the spread. It doesn't move the same way, with the same velocity, with the same momentum. So therefore, selling is more muted. And it's just that the buying is not that strong. It has to go to some value point in order for the value buys, to appear. Okay, also another point that I want to make. How about this? When we look at this chart and we look at the trading range and the support line, and then we look at the volume signature and we're thinking, okay, there is really nothing that's going on here, 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 until probably this point. A very homogeneous volume signature, a very homogeneous price signature in the way of the texture. It looks the same. It kind of produces the same type of the reactions. If there is volatility, it's short-lived and the volume signature does not increase. What happens next that is so different? So here we see volume increase, and we know that there is an effort to do what? To push the price down. Down below which level? Well, definitely this acts as a change of character, initial, so below this level. Any other levels? Well, maybe this level right here. So kind of like this support cluster. Do we have commitments to the downside? First time, no commitment. Second time, no commitment. Third time, only one commitment, suggesting some kind of weakness. Fourth time, depending on how we look. Here are all of the relevant support lines that we could possibly come up with. Do we have a commitment below this line right here? Yes, we have two progressive closes below. Below this low. Yes, but it's very short-term lived and the price recovers really quickly. So we are seeing some limitation on the result in terms of where we are trying, to commit. And that's on the overall increase in the effort. So we should interpret this as increase in effort with marginal capacity to commit to the downside, but not producing really a big action to the downside. And obviously the trick was all in the character. So the character of how the price moves is more important than the length of the swing down, Dmitry is asking. Sometimes the bias is going to be more evident from the character than, let's say, the price structure itself. It's almost like you see how the sell-in was so aggressive and then it just becomes less and less, and the buying starts to produce much easier movement to the upside. So you want to catch that moment when sell-in, both sell-in shows that diminished strength characteristic, and then demand is starting to show the ease of movement. And that moment is the moment of synchronicity. And that's when we want to come in into the position. Francis saying September, October could fall as upthrust after distribution. Yeah, absolutely. I mean, this looks like this upthrust of the upthrust type of situations in phase C, and you're thinking that we are in the downtrend. But also we have to consider that this is a much larger structure. We're still kind of like not out of the woods here, even though low highs, but all of the supports were at the point, even this one, it's still in reference to this initial reaction. So until we actually commit to the downside, we can't really say that the downtrend is confirmed. And I know this is like a late confirmation, but that's technically, this is where it should be. Okay, why isn't September 17th buying clinics with distributional character into the October 1st? You could label it like this. Yeah, you could say reaccumulation, distribution here, and then you kind of go into what? Into another distribution type of thing, like a TP formation, maybe. I'm looking at this reaction and this reaction, and I'm seeing that they are different in the character, not in the magnitude, because that still sustains the trend, but in the character, the spread is increasing. And that's the only clue that we see because the volume signature is actually okay. So that starts to define the range. And then this we see more as an upthrust then. Swing number 7. Okay. And brown. Yeah. So as I said, Dmitry, just looking at how the price moves. Look at this movement and look at this movement. Much faster, right? Each spread is much more. Here as well. So it takes even more days to produce this type of move. So there is less willingness to sell, and that's why it kind of like goes down, goes down, goes down. Or swing 7, so this one right here. There is still some supply here for sure, and that's what kind of produces this this reaction. But they bought into this here. Some momentum bar is probably thinking that, yeah, this is a spring. Reminds me a lot of what we just went through in October, December of last year, kind of like that type of structure, reaccumulation, change of character, consolidation, and then the last shakeout. There is some supply that comes in here on this bar and then on this bar right here. So I think that some of them are looking at the failure here as an upthrust. They're shorting, and then again, as they short, you want to see what kind of result we're going to have to the downside. And character-wise, it's not really there. So I think it was a difficult one, and I think that this is a really good a wake-up call for us on the part of the character that we need to be very focused on about how we see this character. How does the price moves? It's not just a commitment to the downside. And if it's a commitment, then is it a temporary commitment or not a temporary commitment? So there are quite a few ways. Well, if I didn't confuse you enough, here is a pop quiz. On the top, we have the last bias gain. At the bottom, I'm giving you new structure. I want you to think about this for maybe like a minute or so, maybe 2 minutes. I want to give you a little bit more time, to be fair. And I want you to tell me, based on everything that we've discussed about chart number 1 on the top, what kind of bias would you give this chart? All right, guys, your minute or 2 starts right now. Think about what kind of bias the second chart has. All right, guys, where are you with this second chart? Let me know. I have, okay, hold on a second. Okay, Larry, did you say down for this chart? And Rick, did you say up? I kind of missed those. Were they the entries? Okay, yeah, thank you for confirming that. All right. Okay. So I'd say that we're probably, if you're still thinking, this is the time to submit your answer. So we're predominantly on the bullish side, and we have maybe a couple of answers on the bearish side. Okay, great. So the reason why I put this chart on is I was just looking at this chart and I was thinking, in a way, the structure kind of looks the same, right? So it kind of has this upward momentum after a change of character, then a change of character in the middle of the range. In this case, you could argue that this could be one as well. But this one breaks the uptrend type of upsloping structure. So, and we have the last high at the same point of time. And then a trading range, and then some kind of shake lower low and attempt to go up. So structurally looks kind of the same, wouldn't you say? Very close. What about volume? Is it the same? What about volume signature? So is effort signature the same as on chart number one? Sharon is saying no. Okay, well, what's different about it? I probably would be thinking there is more volume here at the beginning of this trading range, right? So if we look into, let's say, this area right here, this is the analog. There is nothing going on here, but there is a lot, tons of going on here. So what is going on here then? Why is volume signature increases, and then after that we have breaks to the downside? Eric is saying that's selling. Francis is saying CO is unloading. Demand is getting stuff. Trend trades. Yeah, CO is selling. Exactly. I mean, we're having a stop in trading range. Who is selling? Value investor is selling at this point. So in our view, this is a part of the CO is selling into the strength. We see how the price goes up, stops, goes up, stops, goes up, stops, goes up, stops again. So all of this selling, 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 selling again. Okay, so we have sold in this area. Now what happens here with the CO? CO becomes inactive. If CO has sold the shares and CO is interested in this position anymore, then the volume signature is going to fall down like this, right? So Boom. We see that. Not only that, the result of that, just because demand has fallen down, is going to be the rallies of what kind of character? The ones that are going to be not that great, the ones that are going to come into the area of the previous selling and they're going to be sold into, like here again, especially on some kind of upthrust action. And then after that, when there is an inability to go up, then they're going to start capitulating in a big way. Institutions will start to recognize that, well, there is no absolute or relative return, so we got to get rid of this before it just jumps down on us and we can't even get out of this position. So they start early capitulation, and then we could see this in the volume signature. Let me ask you this question again. Look at the price structure. Doesn't it look the same? So what's different? Different context behind the volume signature. Yeah. We could go a little bit into the details here as well. I would argue that this move and this move are different in character. Look at how the volume is expanding. It's expanding here too, but relative to the previous volume expansions, it's different. And also the way how it moves. It has some kind of much easier movement to the downside. There is a little bit more kind of like aggression on the first two legs to the downside. We don't see that in the upper chart. The last reaction is very subdued, very kind of like laborious to the downside. So a slight change in the character as well. All right. Well, I thought that would be a really good exercise because the structure looked the same. So, and yeah, the second chart is a distribution, by the way, if you're still thinking, you know, what this is, what the bias is. So yeah, distribution. And here it is. What happens next? We are here. So they sold so much here, and then they went away. And then every time, you know, it goes into the strength, they're selling, they're selling, they're selling, and then they're capitulating finally, and they are out of the position. There is no CO anymore in this stock. It's almost like, you know, that heartbeat, you know, medical tool that they use, like, and you see the heartbeat like this. It kind of like, you know, there is nothing there. And what happens after that? The price just slides down. Nobody's buying, so it slides down. And then when it slides down a lot, it becomes oversold. And then more of a technical rally happens. And then after that, again, there is really no strength, so there is even some selling into the rally. Okay. Other examples of the reaccumulation distribution like structure that would have volume at the beginning where we identify sales selling that would actually end up being a reaccumulation. Yes, and that's why you have to kind of like start with the story. I thought that, you know, this area right here was significant in the way that it told us that the trading range is coming up. And then the volume signature said it's reaccumulation. And then everything unfolded in kind of like under this scenario. It was a trading range and it became an accumulation. But it had an area where it became volatile and had to absorb the supply. In the second scenario, right away we're seeing it's a trading range and it's probably a distributional trading range. It could be, we need to confirm this. And then it's being confirmed in this area right here. different assumptions at the beginning, and different outcomes. And yes, it could be this. And then as this develops, imagine something else is going on, and then let's say some news come, and then an institution starts to buy, and it starts producing this type of structure. So you could have areas where you could have a reaccumulation, distribution, and then reaccumulation. Those are complex structures. I've mentioned this actually multiple times, and I'm going to give you really quickly a couple of examples. By the way, Tesla, still bullish. There is nothing that's going on there. So here is a trading range in Tesla that had reaccumulation texture, distributional texture, and then reaccumulational texture in the same trading range. So your Wyckoff story would be developing throughout different environments here. You would be, your calls are going to be, and the bias is going to be bullish throughout this whole activity. And then you're going to say there is a change of character and there is a distributional bias. And then after this rally, you're going to say there is a reaccumulational bias. And after this area right here, the reaccumulation of bias will be confirmed. And then with this rally, it will be confirmed completely. And it's just a complex trading range. Why does this happen? Like, why is this complexity? A lot of promises that are still in the perception of people are sustainable, but then a more reality kicks in and they cannot provide the orders that people want, for buying this car. And that produces this distributional wave down. And then situation is under control, so institutions are starting to buy in, but it wasn't resolved completely, so we're going into the trading range. And then we're going to see the advancement. Another example of this is this range. We have a reaccumulation type of bullish environment just after the shakeout, and then we have distributional pattern, then we have the rally that is bullish, and the backing up action that is bullish too. By the way, I still don't understand why is there so much bearish sentiment, and this is the discussion for tomorrow for WMD, but why is there so much bearish sentiment when we just came out of the apex formation and we cleared it, and look at how many closes above the resistance we have? The price is not going down. I mean, yes, we're in a short-term reaction here, but who cares about that? We're always going to have some kind of reactions as we go up, even in the most bullish markets. But we did commit above. So at least temporarily, at least for the time being, I think that, people should kind of look at this and just say, yes, I see it's an uptrend. All right. Well, Dmitry, here it is. A couple of examples, of that type of complexity where, we could go from one environment into another. And usually those are going to be multi-year structures. Sometimes you might see this pattern in shorter formations, but usually this type of structure presents itself when there is a shift in sentiment from one side to another, and that happens within the formation itself. All right, let's go to the next segment. All right, so a homework. Yeah, do we want to do this? So I wanted to finish today probably slightly earlier, maybe like at 5:10, 5:15, have some appointments to keep in the evening. So yeah, let's go through this. We have about maybe 30 minutes for sure, so let's do this. So what I would like you guys to do, and this is something that we wanted to establish, even at the beginning of the semester, unfortunately we didn't, but I want to give you this a little bit of the material from one of the specials that I've conducted back in June. And that's the trust the process special. I'm working together with one of our content team providers, and we're working on the trust the process part number 2. There are some improvements that we're going to bring. That's number 1. Secondly, we are going to create a group, which we're going to call Trading Process Group. And this group is going to be meeting just once a month, and on the weekly basis, the members of this group will provide their feedback on the process that they've done this week. In other words, the group is going to be an accountability tool for us to keep up with the process. And obviously, each week, we will send you some kind of emailed material, maybe like a short video or a short article, something to think about, something to read, and then we will share as a group one file in the Dropbox where we could see how everyone's doing. So something very exciting, to look forward to. So with that, I thought that I want to revisit some of the things that we need to do in preparation for those classes. And specifically, I want you to start working on this because a lot of you are going to end up in that group. It's going to be a very unique experience that we're going to create. So I want you to work on this. I want you to, if you don't have it yet, if you don't have the way of how you analyze your positions or look at the watch list, I'd say this. Okay, well, forget about the watch list. Just at least concentrate on your position. So let's say that you have 3 positions, like I have here, actually 2 positions. We have 2 positions here. They were opened as bullish. Okay, short position, short position. Okay. If you're a swing trader and you're a short-term swing trader, then I would want you to analyze those positions each day. How do we analyze? Well, we would make our observations and we would make our deductions. And the main question that we would answer is, are there any actions for us to take on that particular day with this particular position? Should we add to the position? Should we get out of the position? Should we scale out of this position? These are the most common questions. Should we move the stop loss? So here I'm saying small spread with supply tail on increased volume, evidence of supply into the weekend strength. No action is required. Stop loss stays at 21.50. And then I progress from one day to another, and you kind of could see how the stop loss stays at the same place, and you go through the logic every day. Okay, so huge spread down on increased volume, bearish action, move the stop loss. So we are moving the stop loss, and we are showing that on this day there is some kind of action. It becomes, kind of like this yellowish color. And then the second position, going through the analysis, we are actually stopped out, I think. No, will most likely be stopped out. Yeah, and this position has been stopped out on the next day. So we would have an entry here that this position has been stopped out, and that's it. This position has been closed, and this position will go into the post-trade analysis. this position will still stay on. And we still would want to continue our discussion, our analysis every day. That would give us that, habituation of being in the process of making the analysis each day, looking at our positions each day, thinking about them each day, making actions appropriate to the plan each day. If there is nothing to do, then the stop loss stays at the same time, and that's at the same place, and that's it. That's all we do. And then obviously you want to analyze market every day as well. And this could be just very simplistic observations on the volume and spread analysis, on the swing analysis, maybe on some strength analysis, stuff like that. So I would like you as a homework to show me this process with the current positions that you have. If you don't have the positions currently, I still want you to maybe like create some positions and follow them. At least do this for the trade desk that we are going through. Establish this routine where each day you look at the market, you analyze the market, and you analyze the trading desk stock. Actually, we should have established this, right away. This probably would be the best. All right, well, something for the next semester, guys. And then once you go through the position, and let's say your position is closed. So now we want to do our post-analysis. That's the second step. And here I want you to identify, what was the original analysis for that position to even think that, you're going to go into this position. What were some of the tactical decisions, as to where do you come in, stop loss, your target, risk, size, if that's appropriate, and then what was the actual action. So in this instance, this was an actual trade, by the way. Something that I need to discuss with Franz. Point of entry, thinking here that we're going to go down, and obviously completely wrong on the bias. So please don't think that I'm always right. And I'm trying to show you guys, as many trades that fail as possible. So we are going through my failed trades as well. And I think that the key misjudgment here was in this reaction. Increased effort after the failure to commit on such an aggression, and that should have stopped me from thinking that there's going to be a continuation to the downside. There is no supply coming in right here. So obviously just an analytical failure to see the correct bias. How do we deal with the post-analysis? So our, in this case, weekly analysis, and you can do weekly analysis instead of the daily as well, you see the progression of how position is coming to an end. Bullish reversal on ease of movement right here. No supply present on horizontal reaction. Bullish expect the price to continue up. Stop loss moved to 32. So at least stop loss was moved from here, I believe, or here to 32. So it wasn't a significant loss. It was, just a partial loss. And then in the post-analysis, we want to go through our visual recognition skills, trade execution skills, and create some kind of variance for this trade. So I'm saying that bias was defined incorrectly. December reaction, which is this one, has not committed down. Next rally covered over 80% bullish. Could have added this, bullish, bullish. So definitely just, a misstep. Timing. I still would say that the timing was correct. Character, I'm saying not applicable, but probably I should say no here. So by the timing, I mean that the reversal happened. You're entering after the rally. So that was yes. This was no, no. Point of entry, yes. Stop loss, yes. Add-ons, not applicable because the position did not develop. So we would take this out. And then exit, yes. Why yes? Well, because I'm exiting correctly out of the position that is incorrect. So that's the trade execution right here. So overall, I'm still getting the variance that is more positive than negative, right? So my biggest thing here is more analytical. Two of them out of, let's say, 1, 2, 3, 4, 5, let's say 6. So that is about 66%, not 80. So 66% about. Is it a good trade? I would say it's a good trade that is a losing good trade. Why? Well, because even though you know we were wrong on the bias itself, so analysis has failed, but everything else was executed correctly. You still had to identify correctly a point of entry. You still had to identify correctly where to put the stop loss and how to move it in the case of failure as well. So your execution of the trade that failed on the basis of your analysis still was executed partially correctly. And that's what we're trying to do here. So I want you to create these two spreadsheets for yourself as a homework and show me examples of those for the next class. Take trading desk as one of the positions, or trade any of the positions that you're in right now and start analyzing them on the daily or weekly basis like this. Okay, that's another trade, right? So this is a losing trade, this is a winning trade. And again, here in the winning trade, you still in the post-analysis, you want to identify what doesn't work. And then in the trust the process part number 2, we'll talk about the process of how do we deal with this mistake, because usually the mistakes are going to be common. And as you watch Anatomy of the Trade with Franz and myself, you probably will hear a lot that there is a commonality of mistakes that we make. Our task is to define them, and the process will, and specifically post-analysis, will help you to define those mistakes. And then say, okay, if add-ons are important, then we need to feedback loop that back to where we actually should be adding to the position. So for instance, on one of the days, like on each of the day, we maybe could have some kind of column here, add-on, add-on, add-on. And then let's say each day or each week, we would be answering this question, yes or no. No. Why? And you can list some of the reasons why. No. Yes. And because we were forced to answer this question at the time that we are doing our analysis, it brings us to the lifetime decision to actually add to the position, or whatever that trading decision is in your case. So this is something that we are kind of like developing, and this is going to be a live live process, something that is going to be changeable. It's not going to be necessarily static. Okay, great. So here is your homework. Another question, and 3 charts are following these questions, and I think after this we're gonna stop. So from Maninder, question number 1, please comment on my anticipated price movement based on horizontal volume. Okay, here we are. HubSpot, also a very interesting stock, definitely in in that area that is really, really hot. So we're seeing a decline. Again, look at the character of the decline, how it happens. What can you say about the character of that decline? Any thoughts on that, guys? I'm looking at the initial momentum to the downside and then what happens afterward. Kind of like selling that is not really impressive, but it does go below the support, commits there. Another attempt to commit on increased volatility fails, price comes back. So we're seeing some kind of resistance to go down. I'm assuming that our bias here is to the upside. Long-term RSI is above, so that's great. We don't have the relative strength, so this would be a structural trade for us. It's very crucial to understand how the price would move to the upside. Or something that we've discussed, in the last classes. We were talking about the supply and demand horizontal volume signature. It's on the left. So let's kind of look what we could see here. If the price does not fall back like this, and our assumption is that we're going to go up, then the probable path with which the price is going to, travel up is going to be what? So let's say that we are here somewhere. Supply is increasing. So we're probably going to have a reaction right away, something where supply comes in and shows itself. Demand is not very good here, so we probably just will be thinking more about this area right here. So something like this. Again, if price continues to the upside, then the next attempt to go up should into this increase of the supply. And then we would retreat back probably to this demand again. So could go again, to the downside. And that just kind of shows you that there is so much supply in this area right here. This is going to be crucial to see if the stock could overcome this price, this level here specifically. And this is where that, huge supply is. And not just on one bar, but on this one as well. Actually, on that upper bar, even more so. So supply is going to be extremely strong in this area. I would say that I would want to see how the price overcomes that supply first before I even open the position. So let's just assume that maybe, there is some kind of absorption that could happen. But again, we're seeing that there is definitely a grinding up type of action that we might expect if the price does not fall down right away. And then after that, this increase of the supply is going to be noticeable for us, and then overcoming, and then here we're going to lose that resistance. So acceleration should happen in this area where there is a supply, in the absorbed manner. And then think already, what has happened with this type of move. We're probably thinking here a sign of strength in the backing up action. So a period of absorption should happen just because supply is so strong. So that probably would be, if bullish scenario is to materialize, I would be thinking about kind of like this grinding up type of action. Okay, second question. This is a long-term chart. Is my analysis correct that accumulation complete, ready to move up? Okay, so the same stock, and we're looking into the first area right here that produces that change of character, a lot of strength, possibly going into phase B. I would be thinking that this is phase C. I like how the PMO, this is a momentum indicator, is showing some divergence, so that shows some promise. I like how the volume signature is increasing here and the price does not go lower. And I like that the long-term momentum is staying up. Some things still need to happen here, right? So we still need for the confirmation to have some kind of overcoming of the supply in this area right here at 160, and then I would be more inclined, to commit to a more bullish view. But definitely there is a change in behavior. Okay. And something really cool that I need to send, do you use horizontal volume in the PNF chart? Um, so I definitely have seen it, but I use more of the vertical volume signature in the PNF, and I thought that was so cool. And then I put two charts together so that we would guys see how the vertical and PNF are slightly different for the horizontal volume. Why is it different? Well, because the columns are going to have their box size of 5. That's going to condense a lot of the price action, and therefore your volume is going to be different. Even the vertical volume is somewhat different, when we look at, all of those volume spikes and the moves. So I would I'll probably be thinking of maybe analyzing it, differently. So, but still, here is that supply level that we need to overcome. And until it's overcome, we would be thinking that this is, a quite significant move to the downside. It actually looks above this area right here as a sign of weakness. So we need to resolve it to the upside with the absorption of the supply above 160. Until then, I would be still looking for the confirmations, of this pattern. If it's gonna fall from here, where would it fall to? Well, here is our increase of the demand. So these would act as our targets. Target number 1, target number 2, target number 3. Kind of quickly without even, calculating anything, you could think about how the price would move, especially to the downside, because the history to the downside is already written in the horizontal volume signature, whereas the movement to the upside above the price would not have any history of supply demand being there. All right. Okay. So I think that's it for today, guys. Quite a lot of topics that we've covered today. And I thought that, just a collection of all of them, especially the bias game, it was a really difficult bias game. Majority of you have failed, social media have failed. I probably would have failed as well if it would be presented to me like this. So I was thinking a lot about that and how to actually differentiate, some of the nuances right there. And hopefully, we kind of got to that point where we saw clear distinctions in the context of the volume signature, where it occurs, where that selling occurs, how textures, change, and just all of that should help you out just to think about those concepts from different perspectives. So hopefully that was helpful. All right, guys, I will see you tomorrow in WMD. I will see you for those of you who signed up for the long-term campaign on Thursday. I will see you for the last class in the practicum next Tuesday. Let's do the homework. I'm really curious to see how you guys are going to do this, and I'm looking forward to 2020 because, as you could see, everything is kind of like evolving and becoming, um, more in-depth, more complex, and yet at the same time, hopefully much simpler for the understanding. All right, guys, with that, happy trading. and I'll see you next week. Bye bye.